Hello, thank you for joining our new session today. My name is Jamal Khan and I'm a senior tax partner at the Churchill Tax Group. Today we are talking about my favorite topic, or one of my favorite topics, which is growth shares and how to do tax planning with growth shares. So I'll get started. I'll just pull up my slides. Here we go. Okay, let's get to the first page somehow. So yeah, here we are. So tax planning with growth shares. This is not widely known. Growth shares are not widely appreciated by the taxpayer community or people who have properties, property companies or companies that own properties or businesses that are growing. The growth shares can be very beneficial for people who have property companies, and because these can help with inheritance tax, capital gains tax, income tax. If this is not a trading property company but a business, trading business, whatever business it is, you can incentivize staff by giving them growth shares, so that any increase in value in the shares in the company goes to the, or part of it goes to the employees. So there are many benefits, and I've done lots of these for my clients, starting from a couple of millions going to hundreds of millions of pounds. Right. Okay. So let's get started. And then about us in terms of what we do. We're specialists in tax planning and tax investigations. This is all we do: tax planning and investigations and tax tribunal, tax planning for UK companies, UK residents, non-UK coming into the non-UK residents, or companies coming into the UK, or UK people going out of the UK, and what planning needs to be done to minimize their taxes within the UK. What are growth shares? So growth shares are a new class of shares that is issued by the limited company. It has, you need to consider whether you should have voting rights, rights to dividends, rights to assets, on liquidation, rights to profits. So it is a new class of shares that is issued. And why and when do we need growth shares? We need growth shares when there are property companies. For example, a company has lots of properties, say £5 million, and the parents are getting older. So what we could do, or parents want to do, for example, inheritance tax planning, because once they pass away, the value of the shares of the company will sit in their estate. So it would be so if the company grows to be 10-15 million pounds, they will have to pay inheritance tax at 15 million pounds, because that's what the value of the shares would be at the time of their death. So what we would do in that case is we would issue growth shares to the children, and the children would be assigned growth shares, so that would freeze the value of the existing shares. Lots of work needs to be done in the background, and any growth in the value of the company would be assigned to the growth shares, which would be allocated to the children. So, for example, if the value of the company today is 5 million, and we don't want that any further increase to go to the parents, then we would give growth shares to the children. So when the parents pass away, the value of their shares is still 5 million, not 15 million. The additional 10 million would have gone to the parents. Also, So that would help mitigate inheritance tax at 40%. So whereas the additional 4 million that would have gone in inheritance tax between 5 million and 15 million, that would be saved. Also, it would save the capital gains tax as well. So if the parents were to gift the shares to the children at 15 million, there would be a lot of capital gains tax to pay. But if they gift the shares to children at 5 million, there'd be a lot lesser capital gains tax to pay. If it's a limited company, then it's a trading business. If it's not a trading property company, but a normal trading business, yes, I've done this for lots of clients where they have new management team, and they want to incentivize those. Some people do EMI, and that's another topic for another day. But I think growth shares are a lot better than EMI shares if you structure them correctly. You can incentivize staff. Any growth in value then belongs to the management and to the existing shareholders. It all depends on how you structure the growth shares. So this is kind of an example of how growth shares would look like. So this is, for example, Alpha Limited. You can have property, or it can have properties or a trading business. And ordinary share would have normal ordinary shareholders, which are the original shareholders. Then we would add growth shares on this, which will be in addition to the ordinary shares. This is what they would normally look like. How to issue growth shares? Now, this is a complicated process, and even if I try to spend, say, an hour doing this, it wouldn't be enough, because growth shares are not easy to issue, and so you need to make changes to the company's articles of association. You need to have several board resolutions. You need to notify Companies House. You need to do a company valuation. You need to issue the shares. There's a shareholder agreement. There's a price hurdle to be met, to be set, and then to be met. So there's quite a lot of things that need to be done. But this is kind of a summary of what we would do before we issue growth shares. Once you do it, once you structure it, because you've got to carve out the rights of the existing shares and the new shares, and who has more control. There's quite a lot of things that you need to be taking into consideration. So to summarize, yes, growth shares have many benefits to help you save inheritance tax, capital gains tax, income tax, freeze the value of existing shares. It has long-term and short-term benefits. I've said we've done this for many clients who have never heard of growth shares before by their accountants or whoever they've been to see. But once they started to see the benefits, that they really are they're making the best of their tax savings now. Right, this is about me. I'm a senior tax partner at Churchill Tax Group, and if you have any questions, you can get in contact with me. My email is there, my telephone number is there, and I look forward to, if you've got any questions, I look forward to hearing from you. Thank you.